We have a new 1-year forward-looking price target from ChatGPT 4.0. Here in this video, I will break down what ChatGPT thinks Tesla stock can do over the next year, what I also think Tesla stock will do within the next year, and really just even in the next couple of months. We have another big catalyst coming on June 2nd, June 13th, and around June 20th. Not to mention July 31st and August 8th. This summer is going to be extremely volatile, and I believe most likely extremely bullish. This article starts off by saying Tesla is showing bullish signs in the short term as it seeks to recover from the overall slowdown that impacted the EV sector in 2024. Notably, by the close of the market on May 24th, Tesla has gained 3% within 24 hours, trading at $178.95. Despite these short-term gains, Tesla is down over 27% in 2024, which is even more impressive because the short-term positive gain that we seen on Friday came despite reports that the company trimmed Model Y production at its Shanghai factory by 20%. I've also made a video recently talking about just that. How you actually had bad news on Friday, but you had very bullish and outright speculative options trading by big money, which was super bullish, on Friday. Heading into a long weekend suggests that maybe big money knows something that we do not. But after all, we'll have to wait and see if that comes true again. Overall, attention remains on how Tesla will fare in the coming months as it faces resistance at $200. In this line, Wall Street analyst and OpenAI's most advanced artificial intelligence AI tool, ChatGPT 4.0, have offered insights into where the stock might be headed in the next 12 months. Now here's Wall Street's perspective. According to a consensus of 53 Wall Street analysts compiled by TradingView, the outlook for Tesla stock varies. Some analysts are bullish, forecasting a high of $310, which would represent a 72% increase from the current price. The consensus average price target is $183, indicating modest growth of 2%. On the bearish end, the forecast goes as low as $85, implying a potential decline of 57%. Let's be honest, if we get a 57% decline, that likely means Elon's comp package does not go through on June 13th, and or the economy heads into a recession. Both of those could probably cause Tesla stock to fall 57%. On one hand, if Elon's comp package is not reinstated, then Wall Street's going to get concerned that maybe Elon Musk leaves Tesla and maybe Tesla is just an auto company that makes megapacks. Good news is, especially if you've seen the last video, that's not expected to happen. The analyst recommendations are mixed, with 20 advising to hold the stock, while 16 are firmly in the strong buy camp. On the other hand, ChatGPT 4.0 also provided an array of projections and underlying fundamentals. The AI tool emphasized the importance of company fundamentals, highlighting that success in scaling production and meeting delivery targets, especially with new models or updates, is crucial. The platform also emphasized that strong revenue growth, profitability, and cash flow are vital, with upcoming earnings reports as critical indicators. Additionally, new factories and increased production capacity, particularly in emerging markets, can boost investor confidence. Furthermore, ChatGPT 4.0 pointed out that market trends also play a significant role. The global shift towards electric vehicles and supportive government policies can benefit Tesla. However, increasing competition from established automakers and new entrants in the EV space is a crucial factor to watch. Finally, ChatGPT advised investors to consider macroeconomic factors such as rising interest rates, which can impact high-growth stocks like Tesla by increasing the cost of borrowing and potentially slowing consumer spending. Global economic stability and consumer confidence will also affect overall market sentiment. Considering these factors, ChatGPT 4.0 presented 3 potential scenarios for Tesla stock over the next 12 months. In a bullish case, achieving significant production milestones, delivering strong financial results, and making technical advancements could see the stock rebound between $250 to $300 per share over the next 12 months. So that would put you around May of 2025. In a bearish case, facing production issues, increased competition, or broader economic challenges could result in the stock falling to $120 to $150. In a moderate case where Tesla makes steady progress with some headwinds, might stabilize the stock around 180 to 220. Now, I wish ChatGPT talked about this in their report, but you already have low expectations for Tesla, so achieving these milestones is a lot easier as the stock is where it is and you have so many bears on Tesla. Like, achieving the same milestones today to impress investors would be like Tesla delivering 2 million vehicles. Whereas, to start 2024, achieving, milestones would have been Tesla delivering 2.4 million deliveries, because estimates were 2.1, 2.2 plus million deliveries in 2024. Point is, expectations are a lot lower today, so you don't need as much to impress investors. But really, more importantly than that, it doesn't even matter necessarily where deliveries come in. It's all about profitability. It's all about EPS. Think about Apple, that has not grown their headline revenue in a year and a half, almost 2 years now. Some quarters they've actually been declining on a revenue basis, 5 quarters in a row now. Well, what didn't decline? It was their profitability. It was their EPS. So that is the most important thing that will drive Tesla stock either higher or lower. It's not about deliveries. You can have the best deliveries in the world right now. If you're unprofitable, if you're losing money, or your profitability is just not great, the markets aren't going to care too much. Vice versa, if Tesla delivered 1.5 million vehicles this year, well below what analysts are forecasting, but Tesla's profitability increased 25 or 50%, well, Tesla stock would likely be a $300+ company. So I think that context is also important to point out. It's also important to mention that markets are a forward-looking instrument, and a lot of people right now are looking at backwards-looking things, like Tesla cutting prices and this demand environment that we're in based on high interest rates. When the actual reality is the consumer is not nearly as strong, or the economy is not nearly as strong as people thought, inflation should start to really come down over the next couple of months, led by commodities such as oil falling about 10% within the last month. This should give the Fed room to start cutting rates, likely on July 31st. As we get more confidence that that cut will happen on July 31st, as long as the economy is doing well or doing okay, that should become a very favorable market for Tesla on a sentiment basis. Because Tesla's demand is low right now, or perceived to be low right now, because of interest rates. It's unaffordable to get yourself a new car. But as rates start to fall, that does two things. That should increase demand for Tesla, and Tesla's normal business should get better, but that does another thing that people don't talk about. It lowers the odds of a recession. If the Fed starts to cut rates, that equals less chance of a recession, which means especially small caps and interest rate sensitive consumer cyclical stocks should start to do better, which is Tesla by a perfect definition. We also have many other catalysts that are coming here in the near term. You have Tesla's Q2 delivery number coming on June 2nd. That is not tomorrow, but that is next Monday. Wall Street estimates are quite mixed here. On the low side, you're expecting 405,000 deliveries or so. On the high end, you're at about 435,000 deliveries. I think Tesla can beat even the high side and come in likely around 440, if not 450,000. One reason for that is Google Trends data that is absolutely exploding across the board for the Model Y specifically, since Tesla started buying down the interest rate and offering this 1% financing rate for the month of May. You've definitely seen a huge jump in demand, at least here domestically. Not to mention the Cybertruck that's now hitting 99 on Google Trends, which is just insane. I mean, eventually this will have a positive impact to Tesla deliveries. You will get some form of halo effect, but right now I think it's too early to tell. But one thing we do know as a definitive, the Cybertruck is turning everyone's heads when they see it. Like, Google Trends are almost breaking for the Cybertruck. They can't go high enough. This is specifically interesting because the last time you were at 100 was November 26th through December 2nd when the Cybertruck unveil happened. And this was a lot of investors that were searching about the Cybertruck. That's why it spiked up and went right back down. What's happened now is you've just seen a slow, continuous increase in search trend activity as more regular, normal, average, everyday folks start to see the Cybertruck on the street. Their neighbor bought one. Kim Kardashian posted about it, so on and so forth. But long story short, judging off of Google Trends data, Q2 deliveries should come in pretty good next Monday. The next biggest catalyst we have is June 13th. Now, this is Tesla's shareholder meeting, and reinstating Elon Musk's comp package from 2018 is vitally important. If that comp package fails, Tesla's stock could have some steep downside, because that would likely mean Elon Musk would be more tempted to leave Tesla. I don't know if he would or not, but if you're not going to pay the guy for almost a decade of work he's put in every day at Tesla, not even including the last 2 years he's been working for free, I don't think morally you should stay at that company, or ethically. I think Elon would have a good reason to leave Tesla. Good news is I don't think that is going to happen, because if you're invested in Tesla and you vote no for Elon's comp package, then you know you're going to lose a lot of money if that vote fails. Now, some people are not as bright as others, and some people are going to vote no. Of course, that's going to happen. But those people are not that bright, and they want to lose money. I don't think the average investor wants to lose money. So for that reason, I think Elon's comp package will be reinstated. That will be positive for keeping Elon at Tesla, which is probably 25 to 50% of the additional value that's added to Tesla stock compared to other automakers. But it does pave the way for a new comp package, which is going to have even higher tiers, probably 1.5 trillion market cap, 3 trillion, 5 trillion market cap, something along those lines, which if Elon smashed the last two comp packages, he's probably going to smash the next one as well, which is great news for investors. If Tesla stock gets to a $5 trillion market cap, that is almost a 10x from where the stock sits today. After that, we are going to have Tesla's earnings, which will come out around June 20th, the week of that it should happen. June 20th, the 21st, 22nd, 23rd, 24th, somewhere in that time period, we will be getting Tesla's earnings. Now, again, we're going to get the deliveries coming next week. That'll be important, and that'll move Tesla stock a lot. But Tesla's profitability will be a main focus on Tesla's earnings. We also would like to hear what the take rates look like for FSD, whether or not the rumors are true that Tesla is slowing down production of the Model Y, and whether or not we can get new details on these next-gen models that Elon says could be coming by the end of this year. All of that will be a big positive catalyst for Tesla if it happens. Now, if none of that happens and we get another disaster earnings call, then Tesla stock will fall further. But I do believe if Elon's comp package goes through on June 13th, you're probably going to see a lot different of an Elon Musk, because he'll actually have more financial interest at stake here. For the past 2 years, Elon Musk has had no financial incentive to make Tesla stock go higher. And if his comp package goes through and they're setting up for a new one, then he has, well, a financial interest to make the stock do well. And you should never underestimate just how important that is. I mean, Elon Musk is the single biggest owner of Tesla stock. There is nobody else I would want running the company that I invest in and put a lot of my faith into than someone that also puts basically all of their net worth in that same investment. The next catalyst we have is on July 31st. Now, we're going to have a Fed meeting on June 11th. We're not expecting much of a change for that one. We are going to get CPI on June 11th as well. If that's good, great. That's going to create a better market environment for Tesla. We're going to get a lot more data, though, between now and July 31st. the next Fed meeting after the next one. So 2 Fed meetings from now, you're going to have 2 more inflation reports. You're going to have 2 more economic reports, 2 more, non-farms and durable goods and ISMs and all of that shebang. So by July 31st, as long as inflation does continue to fall, you're going to have 3 declining inflation reports. You're going to have maybe 3 reports that shows the economy is not as strong as we think, and this should give the Fed room to start cutting rates by July 31st. It's important to remember that on average, the S&P falls over 20% the first time the Fed cuts rates, and that's usually because the Fed is cutting into a weak economy, usually an economy that is destined for a recession. As long as the economy is not destined for a recession and it's doing okay, then markets should perceive a cut from the Fed as good news. But that is not guaranteed. And the historical precedents would say if the Fed cuts rates, it, can lead the markets to fall over 20%. But again, as long as the economy is doing okay and there's no outrageous fears of a recession, then I think Tesla should do very well off the first cut. And then the big catalyst, which I think all of these catalysts are big, especially the shareholder meeting on June 13th, is August 8th. Now, August 8th is going to be your robotaxi day. Now, I'm sure we're going to get new details on the next-gen vehicles, the next-gen vehicle platforms that are supposed to be coming out end of this year, beginning of 2025, some point between now and August 8th, whether it's on August 8th itself, whether it's on Tesla's earnings coming on, June, let's call it June 20th, June 21st, you should get new details on those cheaper models. That is going to be another big driver for Tesla stock. If it does not happen before August 8th, I'm expecting new details on August 8th. We may also get a lot more clarity into robotaxi and the potential timeline for this, whether Elon and the Tesla team think this is many years away, or they think this is in really the matter of a year or 2. And there can be so many different outcomes to August 8th. I don't want to speculate too much because I think it's a little early for speculation. All I know is that's almost guaranteed to be a positive catalyst. Tesla's not going to put on this event August 8th and not impress investors or give investors what they want. So mixing all of this together, the biggest risk factor for Tesla is the economy getting worse, going into a recession. That's going to be bad news for Tesla, bad news for the markets, all around bad. That's not my expectation. That's not my base case. And the second biggest risk is inflation rising again, which, judging off of commodities and the checks that I have done, that does not look likely. So I think we could be setting up for a surprise summer rally for Tesla. And as EPS estimates have fallen over 30% for 2025, it becomes a lot easier to beat those estimates. It becomes a lot more impressive when you look at a year-over-year comparison for 2025. Tesla came in at 40 cents or so of EPS for Q1. What if Tesla comes in at $1 of EPS in 2025 for Q1? And you're looking at over 200% growth year over year. That becomes a very optimal situation for Tesla stock. So for these reasons, I do believe Tesla stock is going to break out of this range, likely get back into the $250 to $300 range by the end of this year. I do think ChatGPT is being a little bit more conservative for the start of 2025. I think as we get into 2025, especially as rates have fallen, and of course there is a lot of speculation on how that's going to work, whether we're going to get 1 cut this year or 4. Those have big implications for what Tesla will do, what the markets will do. But overall, I think by May of 2023, call it June of 2025, 1 year from now, Tesla should be in a much better place, probably in the 300s. Now, when I look at this, I think about it in a worst case, base case, best case scenario. I think a worst case scenario, you can get doom and gloom to the point the whole financial system collapses. The likelihood of a doom and gloom scenario at this point is unlikely, especially in in an election year. I think the worst case scenario for Tesla was already realized when the stock fell into the 130s right before Tesla's last earnings. I think at this point, the worst case scenario is probably back to the 150s. I think the base case scenario within the next year is probably above 270 or so. That is, again, a mix of good things and bad things and rates falling and Tesla's business starting to pick up. The trough, right? When you trough and start to recover, Wall Street can start to look ahead at better days to come. And I think that's a base case scenario. Now, an optimistic scenario is Tesla comes through with these lower, cheaper priced products coming by the end of this year. Margins are north of 20% on those products. We get an outline for robotaxis to come by the end of 2025. The Cybertruck to continue to scale to 150 plus thousand vehicles next year. The entire Tesla brand benefiting from a halo effect, the economy avoiding a recession with, rates that can start to fall materially. Yes, I understand. That sounds like a lot of boxes to check, but I could see that actually happening. And in a best case scenario, I think by June of 2023, Tesla stock could be at all-time highs again. Now, that's the best case scenario. My base case scenario is around 300. Call it around 300. 270 to 330. That's more of a base case, a more reliable forecast that I would tell my family. But either way you want to put it, that's a lot of upside from here. And I think when you're judging this on a scale of, what's priced in and what's not priced in, there's a lot of bad priced in. There's not a lot of good priced in. So I think you can start to flip that and start to price in more good things for Tesla to come. And that just means a complicated way of saying Tesla stock should do well from here. Let me know what you think about this information down below in the comments section. Give me your thoughts, as well as hit the like button and subscribe to the channel. It's free 99. It costs you absolutely nothing to do so at all. Most importantly, enjoy your Memorial Day weekends, and I will see you in the next one.